Hello, everyone. I hope you guys are having a good day here. Time to do a little bit of a GameStop update. We're supposed to do it on Tuesday, but we're going to do it on Wednesday today. A little bit of a exciting day in the markets. We had the FOMC meeting. They, left the rates unchanged, and really the market didn't do too much. We sold off, we bounced back, but ended the day in the red on the indices. And GameStop actually closed up 18 basis points. So I'll take it. I'll take it. So let's see where we are in the GameStop cycle. So right now, we have clearly reset the cycle with this drop down. And now we're in this connector wave when we need to see where it's going to end. Now, you can make the case that it's already done, right? And we're not going to see any more downside, but you need to be open to the idea of more downside. And that's why we have these connectors, right? So right now I can only make, I can make an impulse down on the 45-minute cycle. I can make an impulse down with 5 waves down. And right here, I can see that we are probably going to get some upside. Maybe by the end of the week, we'll rally into this zone, and we'll know if this zone is going to be a sell area if we get rejected. And if we do get rejected, then we're most likely going to be coming down to this target right around 20. Actually, let me redraw this target, because I think this target was based on this very shallow connector, but I think it's extending. It's going to be more of a bit of an extension. So let's just say it were to come to the top of the range, then the price would most likely come back down to 23.29. But if it were to go to the lower bound of the range, let's just say it gets rejected like 29, then in that case it would be mostly 21.49 to the low of the range. I would probably say like right around this area. Now, this is not a guarantee at all. What I'm trying to say is this is what these Elliott wave counts do. They draw targets. But to be honest, the second you break $26 and the C wave has the technical, the technical requirements have been met for a C wave extension, and it could be very shallow and you have no divergence on the 4 hours, on the 4 hour or the daily, then the wave 2 is done essentially, and this is going to be wave 2 low in, and you're getting ready for this wave 3 to take off, right? So now this wave 3 could start expanding and taking place in another impulse higher, which should take us to new levels, right? We should break above 35 now and then do another impulse. And it could be steep, it could be, a little bit more gradual, right? It doesn't have to be super pump. And everyone's always talking about the mother of all short squeezes, but it'll probably start if we get to the squeeze levels of maybe $50. Yeah, the shorts will probably start panic covering at that point. In the moment, they've still got it. They're trying to maintain control by pushing it down, but we'll see. We'll see who wins. But yeah, that's my count, and I love it when people say it doesn't work, because I've been making GameStop videos for a while now, and we've been following all these counts into these buy areas that have been respected, right? These zones were all dip buy opportunities on our counts, on these corrections or flat targets, and they were all respected and they held, and that gave us the bullish take on GameStop for a 1-2-1-2-1-2 setup, which ended up breaking out, right? So if you were watching my videos when we were down at the 20s, you would have known that we were probably going to break out to these, to a nice little impulse, and we got that impulse, which resulted in a year-to-date gain on GameStop for 81%. And now I'm saying we're in this connector wave. It's a no trade. It's, to be honest, for me, it's not a no trade area, but I'm just charting it for you guys, and to just kind of give you an idea of where we are. And if we do end early and we truncate, then that's perfect, right? And we're gonna be ready to accumulate even more GameStop and getting ready for a major pump higher. We'll take a look at the weekly cycle, and the weekly cycle again still showing some bearish Dual bench strength index numbers 18 and a -5. 3 and a 2 on the 4-day. Oh, sorry, the 4-day, 11 and a 2, the 3-day, 12 and a -1, the 2-day, 10 and a 0. So all these are bearish numbers at the moment. But when you get to look at that money flow, the money flow is bullish. You got green money flow on the 2-day time frame, and the daily time frame is still very bullish. You got thick ass green money flow. It's all there. That's perfect. That's what you want to see in a nice strong uptrend. You want to see money flow back. And the weekly cross back into the green here. Now we're starting to dip back into the red, right? Just a little bit. We're at that 0 line. We're not really dipping back in. But you can take a look at the previous cycles that we've gone through, right? Or like the previous cycle. I guess it would be, I'm on the log chart right now, but I should get off of it. But right here, right? We cut back into the green and we really started to expand. But now we're cutting into the green and the rally's kind of fading away. But I'm not giving up on the stock at all. I think it's going to open up a lot of opportunities. The 4-hour time frame, you're into the red money flow right now, but not all the way in, and it's just like dwindling at the 0 line. And I wouldn't say you have bullish divergence. You don't have bullish divergence, but you have a bit of a trigger wave here signaling that momentum is starting to slow down. You might be consolidating and getting ready, like I said, to extend. Whoops, that's Bitcoin. Getting ready to extend this B wave higher. So maybe a pump to like 29, 30 bucks, right? That nice little 10, 12% pump would do it. But if you go higher, that's perfect. You could always extend the B wave. Your invalidation is when you can make 5 waves up. If you have 5 waves up, that's an impulse. And then you're going to get a connector down and then another impulse higher. So if you get, instead of getting an ABC up, let's say you get 1, 2, 3, 4, 5, then you know that this cycle is, this correction was already done. It's a very shallow correction, which makes it even more bullish. And you want to buy the dip down that it's going to retrace, because it's always going to retrace. And then you buy this dip. This is the dip to buy, and then you get just hold it and wait for the market to take you higher. Okay, all right. So let's take a look at the weekly on Wave Edge to see if there's anything new here. So nothing new in terms of selling or buying on the weekly. Take a look at the 4-day, the 3-day, the 2-day. The 2-day has a nice little green cross here. Bullish setup for sure. Bullish setup. Every time we got a green cross on the 2-day, you had some nice upside once we're back into those uptrends. The daily time frame, you're getting a couple green crosses as well. So again, set up for more upside. Again, we'll know more if it's going to be a short pump that's going to fail, or if it's going to be the real deal and we're starting a new impulse higher. And then 4-hour time frame. Now this is what I like to see. The 4-hour time frame, when we dip down on Monday, you got this big buy signal here. Big green candle, beauty. That's what I want to see. That's what I want to see. This is a good sign. You see people are already buying the dip ahead of time. And the last green candle, green cross, green. The significant amount of buying that came in last time on the 4-hour was right here, right? The last one we got, and we got this major pump. I'm not trying to get people excited and to say like, oh my God, look, this is you got to go all in. Oh, no. That's not what I'm trying to say at all. It's just, it's an interesting point here, but given where we are in the cycle, I would just be careful, right? But hey, because, on the downtrends, there's accumulation that happens, heavy accumulation, and then they dump it, and then accumulate, and they dump it again. But sometimes it gets out of hand. But yeah, I bought some more shares, and I'm accumulating, so that's no problem. I always post when I buy more shares, and I don't have a problem with that. We'll take a look at the 2-hour and the 1-hour, right? You got some buying here happening, smaller time frames. Yeah, smart money started to buy even more. 15-minute is riddled with it. They're just buy. They're all buying this dip here. So I mean, this is making the case. Well, with all this buying, it's really making the case that maybe the wave 2 is done. I would like I would really like a cleaner structure, but sometimes you don't get what you always want, right? And maybe it's gonna do a flat, right? And it's gonna wreck everyone like it did here, right? Everyone thought this was the breakout, but I could only make three waves up, and what ended up happening was that we retraced the entire move, right? We finished with no bearish divergence, which tells me this is a three-wave move, and it's gonna after earnings confirmed that this was a C leg, and there you go. But this was a dip to buy for sure, and this was a flat target. And if it does the same thing, it wants to wreck people, and everyone FOMOs in at like 30-40 bucks, and then they rip it back down to 26. It's going to be a dip to buy, because this is going to be a huge flat setup, and it's going to be, one of these again, and it's just going to take off. So yeah, that's my analysis. So I mean, hopefully it helps you guys. I know some people really hate TA. They don't see it. They can't make it work themselves, and understand. It's not an easy subject to understand either. Like I show this to friends and family, and they're like, "This guy's smoking too much stuff, man. He's on something else." But hey, that's just the life of a of a TA guy, I guess. Anyways, have a good evening, everyone, and let's go get our boys at 120. Peace.